What's up, traders? Today marks day number 23 of the $1,000 account challenge, and we hit a huge milestone. We finally did it. We made 100% of our initial investment in the challenge account. We started with $1,000. We are now up to $2,000, making $42 today, or 2.13% of the total portfolio balance. And I'm going to be honest with you, it could have been a lot more today. What happened was I took 3 trades. I basically panic sold out of 2 of them, and then the third one was a loss. I'm going to walk you through exactly what happened, why I closed the trades where I did, and how I could have essentially made a bit more profits. Though, let me be very clear, nobody ever went broke taking profits. I'm still very excited about hitting the 100% mark in the account challenge, so I'm content with the profits, just saying it could have been more. Starting with the day trade watch list, today we had Google as a short idea below $141. Here's Google on the 5-day, 5-minute time frame. If I just box this price action above, you can see why I put the short trigger at $141 today. All right, it was a stock that was consolidating near or in a range near the support. This morning opening up very close to the 141 level. So moving this to the 1-minute time frame, I mean, it's as easy as this sometimes. Very cut and dry trade here. We get the opening move up, then the sell-off, aggressive sell-off down, rally up, retest of 141 as a point of resistance, and we take the entry. I mean, you know what we do here. We don't chase the move down, wait for the pullback. We get the perfect retest of 141, and from here, it's literally just trade management. Hold through a couple of minutes of consolidation before the move lower, and then we get the breakdown close to the low of day. And here's where mistake number 1 for me was made on this trade, though, like I said, still content with the profits. My mistake was I kind of panic sold out of this position. We hit 10% profit. I was worried about this being a potential double bottom pattern where the next leg up would have looked, or the next leg of the trade would have looked like this, and we would have wound up taking a loss on this trade or closing it for break even. So I didn't want that to happen. Being it the first trade of the day, I wanted it I wanted to lock in my profits, and then my plan was to let it drop if it was going to drop, and then take it short on another rally. Unfortunately, when it dropped, it just never really rallied again. I mean, we got a minor rally here, but at this point, it's too extended. I would have liked to see maybe a couple candles down, a rally up back to this point of support as resistance. I would have taken another short entry there for them right here for the move lower. We never got it, right? So this was it for this trade. Once I closed the position out, it dropped like a rock and wound up missing out on all of this profit afterwards. So Google closed it out using the low of day trading strategy, which I detail in my podcast episodes. If you haven't heard of my podcast, it's called Trade the Flow. We're on Spotify. Go check us out. Google, 10% gain. Can't be upset about it. Next one on the watch list was Meta. We had a short idea on Meta below $364. And this is actually a very similar scenario. Meta breaks below 364 right here, right? And so I'm not chasing the move. I'm letting it consolidate, letting it drop. And then I wind up taking the short entry on a rally up retest of this intraday support that turned to new resistance. And my plan here was to actually average into this trade if it continued to rally up to 364. It didn't do that, right? We do get the curl over shortly after our entry, and then the move down close to the low of day. So again, just using that low of day trading strategy, not wanting this to reverse on me, I took my profits at 10% here, and then it drops like a rock. So I did not even learn my lesson from the first mistake, and I repeated that same mistake of closing the position out too early in quotation marks, just before the larger move happened. So another missed opportunity, a lot of profit margin missed off this trade, but another 10% gain. So, hey, we can't be too upset about that. Third trade was on Disney, long above $93. Now, Disney on the daily chart time frame looks really good today. If I look at the daily, here's Disney downtrend trend line looking like this. Yesterday, we got a big breakout above that downtrend trend line, and I'm thinking, hey, today we get a continuation, right? Moving to the 1-minute time frame, opening rally up above the previous day's closing price sends this stock from red to green on the day, and SPY was pulling back at this point while Disney was pushing. So Disney, to me, showing relative strength. I'm thinking it may continue to go from here. So we do get the pullback to the previous day's closing price. I take the entry long here, but I mentioned to everybody, because we traded live, that I was sizing down on this trade because we didn't have that bounce confirmation just yet. And unfortunately, we do not get the bounce back up to the high of day. Instead, we get a curl over and the stock falls back below the previous day's closing price. Now, I took about a 28% loss on this trade. Larger loss than both of my other two profits combined, right? So I should be red on the day. However, because I sized down on this trade, I did not take a larger loss than what I profited on the other trades. So I'm overall green on the day because of my position sizing, my choice to size down on this trade. And I sized down for a couple of reasons. Number one, the contract volatility. The contracts were trading at about 65 cents here. They were trading about 90 cents up here. That's like a 30% difference, right? So I knew that within a couple of candles, Disney had the chance to drop or move 30% on those contracts. That is the main reason why I sized down. The other reason I sized down is because it's a stock showing relative strength, but the overall market at the time was pulling back. A lot of stocks were pulling back. So I wasn't fully convinced on going long if everything's pulling back, right? And then also didn't want to take on more risk because I knew the volatility of the contracts, it was moving 30, those contracts were moving 30% within a couple of candles. And unfortunately, I got caught up on the wrong side of this trade. So the trade just didn't work. I liked the entry point. It was very close to the 93 level. It was holding above the previous day's close based off of this. I thought maybe we could get a bounce. We didn't get the bounce. So as it broke back below the previous day's closing price, I wound up closing the trade down here for a 28% loss. But even though that loss percentage-wise was so large, I made the right choice because look at what Disney did beyond that. And this is the beauty of entering at what I like to call pivot points. Entering at a price point where the stock must make a directional decision. Either you're going to be immediately green on the trade and you're going to profit, or you're going to be red and you close it right away. The moment that we're red on Disney, look, we close it right out, right? If we go back and look at the Google trade, we weren't giving this much room. The moment that we were red on this trade, we would have closed it out, right? Or even Meta. Now, this was a little bit of a different one because I planned to scale in on this, but had I not planned to scale in here, the moment that we were red on the trade, as it broke back above or reclaiming this old support here, I would have closed it, right? If I was in there with full position size. So the position sizing, the capital amount used on each trade is one thing, but then also the entries taken to mitigate risk is another thing. And that's just two ways that you could manage your risk moving forward. Okay, that's it. That's my 3 trades for the day. So 2 wins, 1 loss straight off the watch list, traded live with the team. So I don't have any time-stamped alerts to show you. But congratulations to myself and anybody else out there that have hit the 100% mark in the $1,000 account challenge. We will continue to move forward from here, and I will see you tomorrow when we continue the $1,000 account challenge.